Hi, welcome to the Market Alert for Wednesday, the 25th of November 2015. And starting off yesterday, the first trade recorded the market as ever, but we had a signal, and then for some reason, the MT4 ETX wasn't updating the data. So for the next 5 or 10 minutes, missed this particular trade. You'll see here I'm trying to actually log into the account. So the first trade of the day, which was a nice profit, I didn't get because of some connection problem there. You can see when I started to reconnect, the market was already above the entry price, and then eventually when I got in there, it was all over bar the shouting. So there you go, you can see now the market trading at the 17,750 level, and now we're due for the news, so there's no point in trading. We've got the consumer confidence figures out, which came out far lower. They were forecast at 99, they came out at 90, so that hit the wire. And then 5 minutes after the news, we had the short. So it was this trade that I actually managed to get into, having missed a really good profit on the first one there up to the economic news. But that's trading, it's how it goes. Sometimes these things happen, and that's it. So having being in a situation of making up the losses from the previous day, 83 points, it was a case of sticking with the trade. At this point I thought we were going to be going back north, but surely, given that the consumer price figures were so bad, or consumer confidence figures were so bad, it was a case of hanging in there to see what was going to happen. And eventually the market moved lower, as you can see there, traded down to the psychological level, drove straight through the scalp. These are lovely bars, these are. This is what you want to see when you're in a trade. You want to see a market drive through the scalp and then straight to the psychological level, and then there's a good chance the market will continue then as well. And this is when you actually start trailing the stop. If the market just meanders down to the scalp and then sits there, well, it hasn't got the momentum to continue at that point. So you have to make a decision. You can either move the stop to break even, give up the profits, take half off the table, move the stop to break even, or leave it to see if it actually goes through, or obviously take the money off the table as well. There's quite a few things that you can actually do. So the market came through and then came back, and at this point we had a buy signal. I've got the stop at break even. You can see I've removed the stop price there, and now sitting in a break even. The market comes back and then drops back and then goes through, and now comes back to the scalp level, not the scalp, sorry, the psychological level there of 17,700, and at this point we've got a second sell signal in there as well. I'll just remove that and now move the stop 50% above this bar here. The market's been coming down, making these lower highs apart from this bar, and that will give me around 30 points profit on the table should the market come back. The market does come back, I remove the trade, and then we have a buy trade to the upside. We've got the market showing it doesn't want to go down here. We've got the support to the left, so let's see how much momentum it's got for the upside. The market then just drives through the entry, and again what you'll see here, got the market coming back to the entry price, and then we see the market drive through the scalp, drive through the 17,750, and then keep driving up to the psychological level, because that's what the Dow likes to do, likes to trade to these levels, as you can see here on the left, down to the bottom, and then drive. If they drive through, they would continue on through to the next one. So there you can see there the market giving 80 odd points profit before it then goes into a sideways range. And in fact, at one point, if we just bring the slider back a bit, you can see there we had actually over 100 points at one point on the trade, and or just under 100 points it was as the maximum. And then the market spent the rest of the quiet session going sideways, hugging the line. And then in the evening, of course, we didn't have anything to shout about. The market just traded sideways, came back down to that 17 1,700, and by that point I'd already given up anyway. And that's as far as the chart goes. I think might be just a bit more. You see the market going back. There you go. So a far better day yesterday, but today it's half day, tomorrow closed, and Friday is half day as well. So I'm going to I'll have a look at the start, see how much momentum there is, but it's a very difficult one. You've only got 2 or 3 hours of trading before the market actually closes, so it does make it difficult. There may be enough momentum, and also again it depends what it does in the pre-market session. Of course, it doesn't help that Turkey shot down a Russian jet fighter, because that's also part and parcel of yesterday's move to the upside as well. The stock market loves a war, and if there's any sign of a war, money and profits is made from selling armaments and all the rest of it. It's a terrible thing, but that's how it works, unfortunately. Now, the stock market loves a war, and that's why you see the market moving high. Yesterday, the news breaks and the market moves back to the upside. Well, actually, it came out about an hour before, and of course, they mark the market down first. I get people short and then reverse and move the market back to the upside. So, a difficult one to call. I shall take a look, and if I see anything, then I might trade it, I might not, or I just might leave it now until Monday, but I'll certainly be here and having a look, and say it's a very difficult one to call because we just don't know what with the geopolitical things going on at the moment, and also what sort of market participation we're going to get by the professionals as well. Let's have a look at the daily chart and the advanced implied, and then finish off. So in the basic, we can see that we had a signal late on in the evening, 25 past 8, which again was a profit the market coming down, but it's too late, and having already taken profits in the earlier part of the session, especially if you caught all 3 trades, then even more reason to stand aside, as I've spoken of before. The daily chart, the market is sideways to higher. It looks like it wants to move higher at the moment. And again, what with the geopolitical issues in the background, it's likely to as well. In the advanced version of PPT, for those that are using it, you can see we had the green professional buying bar yesterday. We also had the selling coming into the market on the PTI, and then the market reversing and then driving higher. Even though we've got 3 bars there on increased volume, they're not actually shown, but you can see they're above the average there. Starts to run out of steam as well as the volume declines. Selling coming into the market, but eventually the market making its way to the 17,800 level there. And then eventually you can see the professionals buying, driving the market there. And then again you can see the selling coming into the market at this level here at the 850 level. And beautiful sell signal there with the increased volume, and then the market coming back down to the 17,800 level. On the news front, what have we got today? We do have some news out at 1:30. Durable goods, personal spending, core PCE price index, revised UOM. All of this is that's out at 3. And crude oil inventories at 3:30 as well. So a lot of news out could actually provide enough momentum for that first hour. Again, it's down to yourselves. We just don't know, but there is a lot of news out there to give the market a bit of momentum, and it will be thinly traded. And again, that allows the traders to actually move the markets, because not many people will actually be there. Thanksgiving is bigger than Christmas in the US, which is why it sort of stretches over 3 days. And then finally, the implied volatility. So let's take a look at. And lower for yesterday. We were in the 13s yesterday, now down at 1288. And again, that's reflected in the chart. We could do with the implied staying above the blue. That's the yellow above the blue line. If we're going to see a correction to the downside in the market, if the yellow one goes back below the blue, then we are going to see this market move higher. Right, that's it for me for today, and also for this week. The next market alert will be Tuesday morning, because this Friday again is half day, and then of course we've got Monday to get back to normal. So I will report Monday's activity on Tuesday, unless of course there is something else in between, like the Fed having one of these other stupid meetings that they had on Monday could give in us some grief. But other than that, I will see you on Tuesday morning. So enjoy the rest of your week. Say this is the biggest holiday for the US. It's just the way it is. I know at Christmas they're only closed on Christmas Day and back to work on the Monday when most of the world isn't. So what we lose in November we make up for during the Christmas period with the US market. Right, that's it from me. I will see you in the next one. Thanks for watching.